Hello ladies and gentlemen, I'm Jonas Knowledge, Senior Trading Manager with GDM. Today's session outlook, we're going to talk a little bit about the a return of the Donald Trump's healthcare bill. Of course, we're looking at a little bit of trouble over there that he might be having. So far, he could have some resistance from the other side. Also, we're looking at a little bit of a decline over the yen, again, also from the US dollar. But the most important event so far is the parliamentary attack in the UK, which, of course, the parliament will return to work on Thursday after the attack in London, which was one of the worst in almost a decade, that left about 4 dead, including the assailant and, of course, a police officer that was stabbed by him. Now, before we continue, it is, of course, a grim news to see something like that happening around the world, wherever that is. However, this also, the markets reacted pretty much negatively on that type of event, with, of course, the exception of gold prices. We saw them breaking above the 1250 key area, sustaining levels above the 1248, which is a resistance, now the support area, which was tested during the Asian trading. But more about that later into our technical session. Right now, I want to focus on some of the fundamentals that we're looking at today. We're looking at a retail sales out of UK. So far, we're expecting some better than expected data. We could see some further upside on the British pound versus the dollar, especially when we're looking at later today. Fed Chair Janet Yellen is going to have a speech that is in about 4 hours time from now. Also, during that time, we're going to be looking at the initial and continuing jobless claims. That's the weekly job data out of the US as well. And of course, new home sale change. This is also a key inflationary data that we're going to be looking at. It's Thursday today. We're looking at a lot of fundamentals. You know, as yesterday, there was a lot of lack of major fundamentals that were moving the market. So everything was on a technical, either a retracement or on a technical upside or a downside. Now, today, however, the market have already priced in for some of the events, but whatever happens today, it's going to be on a high volume, large volatility is what is expected. But enough talk, let's have a look at the chart here. So we can be absolutely sure from a technical standpoint what we're looking at. Euro-dollar chart, we're looking at a bit of a downside from the euro versus the dollar, as our expectations from yesterday were for a very tight range. It was about 30 pips so far until it actually broke out within the past session, and we're looking at also a sideways direction. The currency pair is trading below the 50 exponential moving average. Is going to aim probably for the 200 exponential. That remains also to be seen. Right now, we're going to stay out of this particular currency pair, as the risk-reward ratio is inappropriate. But we're looking also at the British pound here. We can see that the uptrend is still sustained. 50 exponential moving average still intact. We're looking at the continuing upside. Also, as I mentioned earlier, in a few minutes, retail sales out of UK in the next few, in about an hour time. So further volume would be built, and we can see some bounce to the upside on a better than expected retail sales data out of UK. So if that becomes a fact, we could see one of our first targets achieved within the next few hours. Dollar versus yen, already achieved in the previous session. One of our objectives we're looking at for second and third objective as well to be achieved today, as data out of the US later today, and also we're looking out of the Japan foreign investment and foreign bond investment. This is also a moderate volatility expected throughout the Asian session later today. So today and tomorrow on a better than expected Japanese data and worse than expected US data, we can actually see further declines below the recent lows of 110.76 towards the 110, which is our pivot point level, a key support area. Oil prices still stable somewhere around the $48 a barrel level, despite the fact that the Energy Information Administration signaled yesterday for a large number of build of crude stocks. It was roughly around 4.8 million barrels in the previous week. There is something to mention here from the American Petroleum Institute the day previously. It actually showed pretty similar build of stocks, and the downside move was exhausted. So basically, the oversold conditions which we saw the commodity ending in the previous session were at a $47 a barrel, which again was pretty much the same level where the March 14 low was. Therefore, the bounce was at hand. And right now, we're still looking at a sideways direction. Therefore, there's nothing we can do over here. So we're going to start the idle and see whatever happens from now on. 1248, gold prices are trading at the moment, looking for a continuous upside direction. Let's see the bigger picture. The trend is still sustained. We had a one leg up, then a slight retracement, second leg up, and now we're looking at a slight retracement, and we're expecting a number 3 leg up to fulfill the full formation of 1, 2, 3. Therefore, we're expecting that to happen today and tomorrow. So for now, of course, we're going to stick to the sidelines, as the resistance area at 1251 is 1252 is still intact. Before that, however, we can see the price swinging between 1248 and 1252. So right now, we're going to be focusing on the British pound versus the dollar and the dollar versus the Japanese. These two currency pairs, ladies and gentlemen, would be our main focus today. Also, gold prices, of course, on a breakout above the 1252 resistance area. As we mentioned earlier, it's a very important key resistance area, as there the gold as a commodity is making its 100% retracement from the previous downtrend. Well, that's all about it. Please like or subscribe, and I'm going to see you again tomorrow with more insights about today's market. Thank you for watching. Bye-bye.